So today we will be talking about capital gains tax. This is an arena that there's a lot of misconceptions about,
Right.
and I know that Jason deals with it a lot. Take it away, Jason. What do we got?
Sure. I want to talk first about who this applies to and who would be concerned or even thinking about capital gains tax. Now, it should be basically everyone who owns a home who stands to make a profit when they sell their home. So, if I bought my home 10 years ago and I'm looking, making double the money on it or something like that. Say I paid 300,000 and I'm going to make 600,000 on the house, and minus expenses, maybe my profit is $250,000.
Okay.
Even as a single person, I can exempt all of that from capital gains tax if it's my primary residence and I've lived there for, it says 24 of the past 60 months. So if you live
Okay.
there at least 2 years out of the past five, then you do not have to pay capital gains tax. And for a married
Okay.
couple, so the limit for a single person is $250,000. The limit for a married couple filing taxes jointly is $500,000. So,
Okay.
and that means you do not have to pay tax on that money. You also do not have to, well, we'll get into that in a second. But you don't have to pay capital gains tax on that money. That's the biggest thing, and a lot of people
Okay.
don't realize that. They think, "Oh, how much tax am I going to pay on this?" And I've had that question come up two or three times recently.
So the first point that I'm hearing is that basically it can apply to anyone that owns a home and is selling a home.
Mhm.
And the first and there's a couple of forks.
Right.
Uh,
So it has to be your primary residence. It can't be an
okay. So
investment
yeah.
property. Investment
Okay.
property is completely different. That would get into maybe 1031 exchange territory or something like that if
Okay.
you're trying to avoid tax on an investment property. But on a principal primary residence where you live in the house or have lived in the house long enough. Now, a situation that came up with my client recently, they lived in the house up until 2022, moved out. It was an investment property for almost 3 years. In that case, since it was still their primary residence for 2 of those years, though, they don't have to pay capital gains tax as long as they sell it by the end of that third year. They've not occupied it, and it's a little more
Ah.
complicated. But basically, 24 of the past 60 months, and so you recoup, you get all of that money, and it's just yours. You don't have to. That's the misconception part I wanted to talk about is what do you have to do with that money, and do
Uh-huh.
you have to do anything with that money? And so a lot of people think you have to reinvest that money. Again, that gets into 1031 exchange stuff. That does not apply here. You don't have to reinvest that money at all if it's your primary residence. You can just go buy three cars or whatever and put the rest in the stock market, or just have it for trips, whatever you want to do with it, or just invest it in something else.
Got
But
you. So first,
most people do reinvest it. Go ahead.
got it. So first question is this your primary residence? Yes or no? And
Right.
then yes. Okay. Second
Have you
question
lived
is
there?
how
Yeah,
much? Well, how much are you going to make?
sure. And then also,
Yeah.
how long have you lived there?
Okay.
And like the other
Yeah.
thing would be, like, if you bought a house today and you live there for 1 year, you're not going to be able to get out of capital gains tax. You're going to pay if you make a profit, and it's based on the cost
Mm,
basis for the house. So if you paid 230 for your house and you're selling it for 400, for example, and you're going to come
uh-huh.
maybe make $150,000, but that happened in a year and a half, you pay capital gains tax. Most quote unquote normal people will pay 15% if they have to pay it, and most people don't pay it because they're not making enough profit quickly enough to do that. But if you live in a house for a
Got you.
year, if you live in a house for a year and a half, or even 20 months, and you sell it, you're probably going to pay capital gains tax if you make any profit on it.
Okay. So those are the three big factors. And let me just say, if it is an investment property, is capital gains kind of always going to be in the equation? That's
Yes,
when we're going to start to think about 1031. How are you
correct.
reinvesting?
That's right. And that does have
Okay.
time limits and things like that. You have, a certain amount of time to identify properties, and you can identify more than one, and a certain amount of time to reinvest and close and all that. You have to have it under contract a certain amount of time. It's a much more complicated process, but you can do that, and we've done it before. We've done a 1031 exchange. I did one myself with a condo and put it into a flip property and then have profit from that. So you can do it.
Okay. Okay. So that makes sense. So just again, to summarize, capital gains tax could apply to anyone, or it does if you own a property. However, depending on whether it's your primary residence, how long you've owned it,
Mhm.
and how much you're making, it may not apply to you actually.
Most people don't pay capital gains tax. So I'm trying to get at.
Okay. Yeah.
But unless you live in a house for quite a long time, especially if you're a married couple, for example, if you live in a house for a long time, you have to make over $500,000 to start getting taxed on that. And that means not, that doesn't mean you sell it for 500,000. It means your profit
Right.
after all the fees and stuff are paid and after your cost basis is deducted. would be half a million
Hmm.
dollars. And so beyond that, then you'd start paying tax. And so like
Okay.
if does that make sense? If you had a
Yes.
and if you're a single person, it's 250, like it says
Hmm.
250,000. So if you're a single person, you own a house a really long time, theoretically you could, well, even or in a really, really up market, you could make that much money. But by and large, most people don't pay capital gains tax these days.
Got it. Makes sense. And super important caveat, certainly on my side, I'm sure for yours as well. I'm certainly not a CPA. I'm not a tax expert.
Right.
So, this
That's
isn't
right.
tax advice. This is just general
Yeah.
information.
Right. And you
Um,
can verify all this by looking it up on the IRS website or speaking to a CPA, of course. Absolutely.
for sure. And speaking of which, if people want more information, what would you recommend people do for more information about this?
Well, outside of contacting a CPA, you can call us. You can call
Yeah.
me, call James. Either one of us would be happy to walk you through this or get you in touch with the right other professional. If you need a tax professional to talk to, we have those as well.
Cool.
Yeah.
Sounds good.
Thanks. Appreciate it.
Thanks, man.